Welcome to Valkyrie Simple Finance. Understanding before investing. Once you understand stocks, ETFs, and bonds, the next question is simple. How do you combine them into a portfolio? A portfolio is simply the collection of investments you own. A portfolio matters because diversification reduces risk. Instead of relying on a single investment, you spread risk across multiple assets. Building a portfolio involves three key decisions. Asset allocation means deciding how much of your portfolio goes into different asset types. Stocks offer higher long-term growth potential, but they can be volatile. Bonds tend to be more stable, but usually grow more slowly. For many beginners, broad market ETFs provide diversification in a single investment. A simple beginner portfolio might look something like this. The longer your time horizon, the more risk you can typically tolerate. Risk tolerance is personal. Some investors stay calm during market volatility. Others feel stress when markets fall. Over time, portfolio weights change as investments grow at different speeds. Rebalancing restores your original allocation. Many beginners make the same mistakes. A simple portfolio is often the most effective. Clarity, diversification, and patience usually outperform complexity. A strong beginner portfolio focuses on three principles: diversification, asset allocation, long-term discipline. In the next episode, we'll explain the biggest mistakes beginner investors make and how to avoid them. If you want to understand investing before risking money, subscribe and continue building your financial foundation.